Yesterday, the market actually dropped about 2.5% with the increasing of the supply level, and also you can notice that it actually broke below this up channel. So is this just a normal market correction, or is it a bubble, or even a crash? So in this video, I'm going to analyze the S&P 500 E-mini futures with the price action analysis together with the Wyckoff concept, and to predict where the S&P 500 might stop under different kind of the scenarios, and also what to expect next. So I'll also dive into the intraday time frame to look at a bit more detail. Alright, so let's get started now. So this is the daily time frame for the S&P 500. As you can see, overall we are probably into this up channel for quite some time. So this is the up channel, and right after we breaking out of this reaccumulation range, that's somewhere around mid of November last year. So we have a breakout and some kind of the supply absorption, and subsequently it's just traveling within this up channel for at least probably 2 months until now. Yesterday we see that it actually just broke below this up channel, and that comes with an increasing of the supply level, and in terms of the price spread is huge. So we haven't seen this kind of the bearish bar for quite some time. So if you really want to have a comparison, probably we can just compare it to this topping candle right there. So this is very similar, and that comes with the increasing of the supply level as well, or even this kind of the candle right after a climatic run up. So this is also a topping formation with the spike of the supply level. So this is very similar. So we have the spike of the supply level, and we are kind of at the top of the market, and also we just broke below this up channel. So all this actually pointed to, yes, this is a start of the market correction. Alright, so let me just dive into the hourly time frame, and let's see if we can get a lot more detail from the hourly time frame. Alright, so here we go. There are quite a number of the occasions, especially when we look at this hourly time frame. For example, when we're traveling within this big up channel, there is some supply increasing, which actually brought below this range right there, but there is no follow through to the downside, and eventually it just get back up. But recently you can see that it's getting a bit volatile, so especially with the spike of the volume, and subsequently we see that there is a really a commitment below the downside with the increasing of the supply level. So if we zoom in on the price action yesterday, we can see that that is actually trading range right there, and subsequently just prior to the US Open, during the pre-market or the non-regular trading hours, we see that there is a spike of the supply level compared to the previous session. You can definitely see that the supply is a lot higher, and that actually break below the support, and that comes with quite bearish bar, just 2 bearish bar right there, and subsequently there is no ability to rally up. So look at this bullish candle is very small, and at a US opening session we see there's another breakdown, so that actually commit below this previous swing low level at about 37.90. Although we see a bit of the demand tail right there, and also touching this demand line. So if you just pay attention to this, this is a demand line of the up channel. So that actually provided a bit of the support, and in line with this 37.70. So this is pretty much a double support. One is from the demand line, and the other is the classical horizontal support. So it's not unusual to have seen this kind of the action where we have double support, and you can see that the price actually just bouncing up a bit here and there. So just have a bit of a bounce up with a demand tail, but eventually we did not really see upside follow through, and also rejected at this round number 3800 level, and subsequently have another push down, another bounce up, so eventually forming this kind of the apex formation. And the commitment or the breakdown actually happens somewhere around 3 a.m. at my time zone. So this is the breakdown bar, actually just break below this demand line, and then we see even lower price right after the market hours. So far is relatively bearish, because we did not really see any kind of the bounce up with strength. So even this rally up is just did not really commit below this last candle to the downside. So the immediate resistance level, I would say that will be somewhere around 3770. This is also where this breakdown happened. So as long as the price is below 3770, then I think there is some more room to go down. So let me just go to the daily time frame, and let's talk about a different scenario. So under a normal market correction condition, I will expect S&P 500 to continue to travel down to at least test this level where I actually box up with the purple color. The level is somewhere around 3670 to 3700. So I expect further continuation to the downside to at least test 3670 to 3700 level. So if the price for the S&P 500 can actually bounce up from this level, I think this will be the most bullish scenario. And what I actually anticipate from this scenario is something like this, where the price actually spend some time to consolidate, whether it's through the apex formation, triangle, or some kind of the horizontal type of a consolidation. So until the volatility settle down, and it will just resume the uptrend and continue to trend upwards. So I think this could be the most bullish scenario. And another thing that we need to bear in mind is the immediate resistance level where I talk about is somewhere around 3770, so which is this purple line right there. So if it can just touch this level about 3700 and bounce up to the level and spend some time there, that could be another bullish case, breaking out there and continue to break this all-time high level. So that's a relatively short duration of the market correction. And also another thing to take note is that we need to definitely monitor the supply level, because if the supply is very consistent and or even increasing, like is higher than yesterday's supply, another analog that we can refer to is something similar to the previous correction. So take a look at this. So we have a very consistent supply level. So you can see that there is a very high level of the supply for these few candles, and eventually have another leg down that comes with a increasing of the supply level as well. So actually this correction is quite extensive, and from about 3600 all the way to about 3250. But if we have this kind of the supply level, like for example today we even see the increasing of the supply, then maybe you can just break right below or right through this support level at 3700 level. Then I think we'll just heading down to 3600 to about 3500. So this area could provide some kind of the support. So this is the next level or next area of the support. If it actually break below this purple box about 3700 to the 3670, then I think I would be looking at somewhere around 35 to 3600. So if you can just bounce up from there, overall I think it's still very similar to this kind of the correction, or even this kind of the correction where the supply is increasing. So let's take a look at the first correction right there. So this is the first pullback. So we have a climatic up move and have a correction, and subsequently we see that there's another test that comes with a decreasing of the supply level, and eventually just get back up and have another run up with a climatic action. But this reaction actually comes with a lot more consistent of the supply level, unlike this previous correction. So in this case, I think the duration is a bit longer as well. So you can see that it actually lasted for from September until November. So this is more shorter correction. So at the moment, if this reaction, so if the magnitude of the reaction is relatively shallow, then so will be the duration. So it will be a shorter duration if the magnitude is relatively shallow. But if it's just continue to have this kind of the bearish price spread together with the increasing of the supply, something like this, break down below this support level straight through, then it will just likely to test the 35 to 3600 level. So in terms of the magnitude, you can see that it's pretty much similar to this kind of the magnitude. Then for the duration wise, we probably can expect it's very similar, at least for about 2-3 months as well, to have this kind of the consolidation. So this is what I actually anticipate for just a typical market correction. So for the bubble, what I actually see is a very quick recovery of this level. So the first level will actually have a very strong support and eventually have a very quick recovery and breaking new high and keep trending up. And in that case, it probably is building up a bubble, and it can just pop anytime, because it's still just we do not really see any kind of the decent consolidation or decent pullback with time and also with the magnitude. So a shallow type of consolidation with a quick recovery might end up to building up a bubble condition for the market. But the bubble will just keep growing bigger and bigger, and until waiting for some kind of the event to pop the bubble. So that is another thing that we need to watch out. And for the crash, so far I don't really see this as a beginning of a crash, because of one thing is very simple. We just take a look at this sort of the supply level. So it's very much similar to let's say is maybe this sort of the supply. This is slightly higher, and in terms of the supply, I think this is slightly higher. But if you want to compare with a crash, this is something that you can definitely compare to. So this is a COVID sell-off, and this is definitely a crash, because prior to that, I do not really see a lot of the signs for the distribution. So it's just have this kind of push and another up thrust, and followed by a very quick sell-off. So this is definitely a crash, and that comes with a spike of the supply level. So you can compare it to the supply level of the previous crashing scenario, which is this COVID sell-off. So far I don't really believe that it is a crash. So in order to have this kind of a crash, then I think first we need to see a bubble, which will just continue to go up and up and up, and until everyone just want to chase it. And at that time, then we probably can create something of the acceleration of the run up, and that could become a bubble and eventually maybe a crash, and that could be triggered by some other events. So far I still stick to the scenario for the beginning of a market correction. So I have just run through with quite a number of the scenarios. So far I think this is the first level that we need to pay attention to. So about from 3670 to 3700, if it can bounce up, then I think it will still be relatively bullish. Otherwise, if it just break below this level, then definitely we'll be looking at the next level from 3500 to 3600. So bear in mind, the market, broad market correction will definitely drag down a lot of the stocks. So if you're swing trading, or you are hold a position trading or investing, then definitely watch out your stop loss. And for example, yesterday market correction actually just stopped me out for quite a number of the positions where I have very tight stop loss to protect my profit. So for the rest of the swing trades, if I'm planning to hold for very long term or into the position trading, then likely that it won't trigger the stop. But for typical swing trading, just have the stop loss, the normal stop loss, or even tighter stop loss in place. So the opportunity is always there, and I can always get back in when the market is settled down and when there is some kind of the reversal signal. This is the end of the video. Hope you enjoyed it and get something useful out. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and also subscribe to my YouTube channel and to get my weekly stock watch list update and exclusive content for free. Thanks for watching. I will talk to you soon.